What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart along with the stock market as we kick off the new week, experiencing a crash throughout all markets of the likes that we haven't seen since C19 back in March of 2020. As the volatility index of the stock market explodes up 95% as we get ready to kick off this week. Asset prices are tumbling everywhere, whether it's crypto, the US stock market, which the NASDAQ is down over 4% in pre-market, the US dollar currency index, gold and silver, and even treasury yields. Last Wednesday, we had the FOMC meeting where Jerome Powell hinted very aggressively that rate cuts were likely coming on September 18th. The stock market attempted to push up during that moment, but since then, for the last 3 trading days, has crashed in unbelievable fashion. And now, in just a matter of a couple of days, the market has not only priced in a 100% probability that the Fed will be cutting on September 18th, but has placed a 99.5% probability that they will be doing 2 cuts on September 18th, and a 67% probability that they will have done 4 cuts by November, with a 100% probability that we'll have done at least 3 cuts by November. So there's a lot to take in. Things have rapidly deteriorated very quickly throughout all markets, and we're going to break this video down into 2 different sections. 1, talking about crypto, and 2, talking about the United States stock market and global markets to understand what is going on here. Something I've preached since the beginning of time is that crypto is tied to the stock market. So I think the most important thing is to at least start here with the US stock market. The first thing we know is that we've all been watching the Russell 2000 to see if we could get escape velocity happening here at the last retracement level. I can't tell you how many newsletters has been written about this, how many YouTube videos has been made about this, how many tweets have been made about this, and at many points acknowledging to you guys that I sound like a broken record. Historically, this has been an incredibly important market dynamic in order to see the cryptocurrency market break out. And as we can clearly see, massive rejection right there from the 786 Fibonacci retracement level in a matter of just a couple of days. This is the volatility S&P 500 index, also known as the VIX. This measures how volatile the market actually is, and we haven't seen anything of this magnitude and this aggressive since C19. So the crash that we are experiencing and living in the thick of this moment is like living through C19, with the volatility index up now 102% just today, hours before the stock market even opens. With how violent this rejection has been in just a couple of days, it of course brings up concerns due to the fact that this is a technical level that is happening from for the Russell 2000. And of course, all the discussions we've had with the Dow Jones Industrial Average reaching the height of the roaring 20s bubble from 1929 that inevitably popped. It's pretty early to sit here and say everything is popping and the sky is falling, but we know the technical levels that we are at when it comes to the Dow being a full 4.236 extension, and what happened when we did print a bubble of this magnitude, and the fact that we completely swatted away from the last Fibonacci retracement level on the Russell 2000. And the VIX is telling us this is not your typical correction or pullback, but that this is a full-blown crash. In addition to not only seeing massive percentages in pre-market for things like the NASDAQ down 4.5%, the fact that we're seeing metals taking a hit at the same time with the dollar, with yields, there's a very high likelihood this is a liquidation, this is a margin call event happening in the US stock market. With the technical level that this is happening from, the rapid intensity in which it is occurring from, not only here for the Russell, but from the height of where the Dow Jones Industrial Average is and the height of the NASDAQ. It doesn't seem like it's a time to really get cute with this. Decisions will have to be made for a lot of people, probably pretty quickly, it seems, to either tough this one out, hoping that some intervention comes into play sometime soon, or having to reduce exposure to stocks. I'll never tell you what to do, but I've been vocal that as my hedge for crypto, I have been opening shorts over there on the US stock market. So my net exposure is short on the stock market, but it's really just as a hedge. Either way, the fact that this has happened so quickly has been astonishing. And what's been truly amazing is there hasn't been any type of like global narrative to perpetuate it for why it has happened, except for the thing that we said would move the needle for the Fed. And that at this point, it now becomes trying to save things from spiraling out of control rather than the bullish rate cuts has been perpetuated for the past year and a half. As on Friday, we got the unemployment rate. Unemployment came in at 4.3%. It has now been creeping up for years. That's the highest unemployment rate we've seen in 3 years. It exceeded expectations of 4.1% by coming in at 4.3% last Friday. And as we could see, that graph has just been climbing itself up. We can kind of shrink in a little bit, get an idea of this is what unemployment is now looking like here in the United States. And in just a matter of Thursday, Friday, and here in pre-market, before the stock market even opens, it has just been an obliteration of all markets. And again, to put it into context of the concern of how quickly this has all happened, with how hard this knockback has been from that last retracement level there for the Russell 2000. Of course, the knockback for the NASDAQ and the Dow and the S&P is really just when we look at the volatility happening in here. This is not like something we have seen since C19. This is like crashing stuff. In addition, the fact that we are seeing metals falling at the same time is very similar to like what happened in C19, is that it becomes a liquidation event of everything. And I'm not certain that we've even seen the full-blown liquidation of the stock market yet. One chart that we've spent a lot of time on throughout the last year has been the NASDAQ 100 technology sector. We spent a lot of time comparing what this rise looked like and what we even had for Bitcoin when its top came in. Originally, we started really looking at it back in here to say, hey, look, if this thing starts kind of doing the same thing, we'll keep our eyes on it for it. Well, guess what? It just did. It set the new high, took one more attempt at it, and then failed, just as we've seen tops come in and then fail. And again, with how aggressive this is happening, it doesn't seem like a time to get cute, because this is not even happening just in the United States stock market. Japan logs its worst day since 1987's Black Monday crash with a 12.4% loss. It was the worst day for the index since the Black Monday of 1987. It erased all gains this year, moving into a loss position. Japan stocks confirmed a bear market on Monday as Asia-Pacific markets continued the sell-off from last week, with the Nikkei 225 and Topix dropping over 12% in one day. So be careful out there. This has happened very, very rapidly in the blink of an eye, and we know that it's happening from technical levels at the same time. We are not seeing volatility of a typical pullback. We are seeing extreme volatility and likely margin calls happening everywhere and probably into this week. Speaking of margin calls and liquidations, in the last 24 hours, we've seen $1.12 billion liquidated from the cryptocurrency market during this crash. We've seen Bitcoin set new lows. Ethereum set new lows. XRP gets slammed back down at 45 cents, and this whole market unable to find any love after getting rejected from the 702 retracement back in March. One thing we've talked about in videos for the last couple of weeks has been Bitcoin's Wyckoff structure. Talked about this in several videos, talked about this in the newsletter. Even this, which of course is the inversed Bitcoin price chart from here in 2024, the speed at which this is pulled out of here after hitting its low is unlike something I've ever seen to do it that fast, which of course is Wyckoff distribution. We've talked about that here in YouTube videos, talked about it in the newsletter. It's the last tweet that I posted over there on Twitter on July 24th. Outside of my typical, I've published a YouTube video tweets, but that is unbelievably aggressive and even faster than any I can even pull off the top of my head. I don't think I've ever seen one that quick. Now, looking at Bitcoin from this perspective of how it's been doing for the last 3 to 4 years, we could see, of course, it's done all the same things. Here you are back at these peaks. What was also really interesting about this price action, and I've observed this and wondered, man, there's kind of one element that's kind of missing there, and that was that flush that rose itself up and then, whoom, flushed itself all the way back down. So technically speaking, it's kind of like on its last lifeline of being like, hey, we're still following cycles. Another thing I've observed this morning is that one thing we talked a lot about with this whole move that has happened here with Bitcoin is that one, of course, it's gotten back to its 4.236 extension based on the 2018 bear market that we had, that it really just pinpoint precisely nailed the thing. But what's also been interesting was about this move is that the move really acted like the retracement rally that happened in 2019, and the size of it is very, very similar to what both of these ended up doing, and the structures along the way all very similar as well. We've of course talked about this in depth as well, about how these levels have been very similar to what we saw back in 2019. But there are some interesting dynamics that have happened in this price action in sort of a compressed style that actually ended up leading to what? The C19 crash, which of course is where we had this level of volatility happening in the market back over here. That's really, if we just kind of look at what did it structurally do before it ended up doing that, and that we've actually done something quite similar on a more compressed time frame right now. You zoom in here and see it. There's really all kinds of similar waves in here that happened like it did back then. All of these happened here with these moments and eventually led to C19 and then what we're experiencing right now. So I can see the case for there being a little bit of hope that this is kind of that big flush in the market that turns it back up, but it sure feels like we need somewhat of a miracle. And really, it would be nice to see some actual signs show up in the market first. So what would some of those signs look like? The most simplest way is really just volume. Right now, we're likely experiencing a liquidation event, a margin call happening in all markets. When we experienced that back in 2020, we did have a volume signature of reversal volume that marked that the bottom was in. Most participants did not believe the bottom was in at that moment, but we had the volume signature show up. It full-blown liquidated, and then buyers showed up and consumed the liquidation. Right now, we do not have that volume showing up in here. There is no big buyers showing up at this moment. And with it still being pre-market, as I'm trying to get this out early in the day because it could be a big day in all markets, we haven't seen the signs show up yet. So will the Fed come out? Will the Fed ease everybody's mind? Will the cascading liquidations come to a conclusion? Those are all still things yet to be determined. But right now, we're really in the thick of the moment, like a C19 crash. And the way we could start saying, hey, maybe something is showing up here is if we ended up seeing a volume bar come in that was able to consume the selling that we are seeing throughout the market. As of right now, it's not there. It's a holy cow, let's see what happens here. How aggressive is this thing going to get? Can there be evidence of a completed liquidation followed by extreme buy volume? As for the timing of this occurring, it's really, really fascinating to me because it's almost like magical unicorn fairy dust or puppet masters pulling the puppet strings, because even the last newsletter was titled It's Time, August Answers the Crypto Cycle Theory. All stars aligned for Bitcoin and the altcoin market to prove the timing theory. Now, if you've caught Markets in the Morning or past videos, even when it came to things like XRP, a lot of people thought maybe that case would wrap up in July. And while I have no insights into it, I saw a lot of things on charts when it came to Bitcoin, when it came to the altcoin market, when it came to dominances to say August 5th was probably going to be a significant day in the market. Back in 2021, when this exact amount of time had elapsed, this is the moment where the dynamic of the entire market changed and it shifted away from being about Bitcoin and more so about altcoins. Another thing demonstrated here in this newsletter was not only discussions about dominances, but when you look at the actual altcoin market and the cryptocurrency market from 2017 and from 2021, they actually went on into their expansion where the dynamics of the market actually changed at the exact same amount of time after the capitulation had occurred in the prior bear market. This week signifies entering into that exact time frame. And really, it actually is today on August 5th. Amazingly, we're going to open up the day with extreme liquidation, extreme price action in global markets. But it was this moment in time where a dynamic shifted in the market. And sure enough, we are seeing a dynamic shift happen in here, especially with that VIX up 120% in pre-market here on August 5th. So as of right now, heading into this new week, after the last couple of days of craziness, it may still get even crazier. But the thing to be looking for, and I can tell you, I'm not buying this market, The things I'd be looking for that would start bringing some level of some kind of optimism would be things that have signified bottoms are in after extreme crashes like this, and that is met by high buy volume. Doesn't mean you nail the bottom. We don't know how bad this thing is going to get right here, but the significant thing to look for is for high buy volume. Buy volume that exceeds the liquidation volume. So buckle up. It's sure to be a bumpy road. If big buy volume does show up today, we'll of course make content on it. But with how aggressive this has happened, and if this is margin calls in the stock market, margin calls in crypto, we really just need to see this dust settle before any level of excitement showing up in here. It's incredible to me that this is happening on this day, as in past cycles for the cryptocurrency market. If anybody's going to hold on to that ideology of past cycles dictating how this market operates, we've entered into the week that swapped the whole dynamics of the market both in 2017 and in 2021. Right now, there's no signs of that, but if we see big buy volume show up, we can start getting excited about it. Otherwise, we're in the thick of one of the biggest VIX moves that we've seen in the last decade, only matched by C19 and the great financial crisis. It's certain to be a crazy week, and we'll see if there's any type of Fed intervention. Otherwise, guys, I'm going to wrap this thing up so I can get it out before the markets do open. Like I mentioned last Thursday, I would be off on Friday. I actually had my last summer vacation planned out. Unfortunately, I had to cut my summer vacation short and come back 2 days later due to a family medical emergency. So I am back. I'm available here, and I'll fill you guys in on that stuff as markets tame down and it's not so chaotic out here. So I'll check in with you soon, guys. I want to thank you all so much for watching. If you'd like, check out the newsletter over here on blockchainbacker.substack.com, showing you how this is the actual week where cycle theory gets tested. You can check out bcbacker.com for over 40 videos and 11 hours of content teaching you how to set up your own charts and indicators within TradingView and CoinTrader Pro. There are links in the description of this video to bcbacker.com and to the newsletter at blockchainbacker.substack.com. Otherwise, all eyes on the market as we're in one of the most intense moments in 4 years. But all right, that's it. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you are new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.